What's up, investors? Buckle up, because in this video we're going on a wild ride through one of the most explosive economic predictions of our time. I'm talking about the kind of forecast that could send shockwaves through the financial markets and have you questioning everything you thought you knew about investing. Renowned economist Harry Dent has dropped a bombshell warning that we are currently living in the midst of the biggest bubble ever, a monumental economic distortion fueled by years of excessive money printing and stimulus spending. And according to Dent, this bubble is so colossal, so unprecedented in scale, that when it inevitably bursts, we could be staring down the barrel of a stock market crash that makes 2008 look like a mere hiccup. Now, I know what you're thinking, Iggy, that sounds crazy. How could anything be worse than the Great Recession? But before you dismiss Dent's claims as fear-mongering, hear me out. This guy has a track record of accurately predicting major market turning points, like the dot-com bust in 2000. So in this video, we're going to dive deep into Dent's bold thesis and examine the evidence behind his startling proclamation. Is this really the bubble of all bubbles about to violently deflate? Or is Dent off his rocker this time? Let's break it down piece by piece and you can decide for yourself. But I'll warn you now, brace for impact, because this forecast is going to rock your investment world. The bubble of all bubbles. According to Dent, we are currently trapped in an unprecedented economic bubble, one that has been artificially inflated by excessive government stimulus measures and rampant money printing over the past 14 years. This bubble, Dent argues, is unlike any we've witnessed before, dwarfing previous speculative manias in both scale and duration. While historical bubbles were typically driven by natural market forces and investor exuberance, the current situation is a byproduct of central banks and governments flooding the economy with easy money in a desperate attempt to cure the lingering hangover from the 2008 financial crisis. It's akin to trying to cure a hangover by consuming more alcohol, a temporary fix that only exacerbates the underlying problem. Dent's analysis paints a grim picture of an economy propped up by unsustainable monetary policies and artificial stimuli. He contends that this bubble has been stretched far beyond its natural lifespan, with most historical bubbles bursting within 5 to 6 years, while the current one has persisted for over a decade. This prolonged distortion, according to Dent, sets the stage for an even more catastrophic crash when the bubble inevitably bursts. At the core of this bubble lies the overheated housing market, where Dent predicts a return to 2012 lows as the excess supply of residential properties, fueled by rampant speculation and multiple home ownership, finally corrects itself. He points to countries like China and Japan, where an increasing number of residents are purchasing vacant properties solely as collateral against a potential market crash, further exacerbating the imbalance. A crash bigger than 2008. Now, here's where things get really interesting. Dent warns that when this massive bubble inevitably bursts, we could witness a stock market meltdown of epic proportions. He predicts that the S&P wink with tongue sticking out 500, one of the most widely followed stock market indices, could plummet a staggering 86% from its peak levels. And if that's not shocking enough, he believes the tech-heavy Nasdaq could experience an even more severe 92% nosedive. But wait, there's more. Even the high-flying tech giants that have been leading the market rally may not be spared from this potential crash. Dent specifically mentions Nvidia, a company that has been a darling of investors in recent years, suggesting that its stock could plunge a jaw-dropping 98% from its highs. Imagine the impact such a crash could have on portfolios and the broader economy. Now, you might be wondering, why is Dent predicting such a catastrophic scenario? Well, he points out that most economic bubbles tend to last around 5 to 6 years before bursting. However, the current bubble has been inflating for over 14 years, which is highly unusual. According to Dent, the longer a bubble persists, the more severe the eventual crash is likely to be. And given the unprecedented nature of this bubble of all bubbles, he believes the ensuing crash could surpass the severity of the 2008 financial crisis, which was one of the worst economic downturns in modern history. As for the timing of this predicted market bottom, Dent initially forecasted it to occur in 2024, but he has now pushed back his estimate to early to mid-2025. This adjustment could be due to various factors, such as the resilience of the markets or changes in economic conditions. The housing bubble 2.0. At the heart of Harry Dent's bold prediction lies the overheated housing market, which he believes is at the epicenter of this unprecedented economic bubble. According to Dent, home prices have skyrocketed to dizzying heights, doubling or even tripling the values they are likely to settle at once the inevitable crash occurs. This frenzy of speculation has gripped the housing sector, with an alarming trend of individuals amassing multiple vacant properties solely for investment purposes. This behavior bears an uncanny resemblance to the rampant subprime lending practices that precipitated the catastrophic housing crisis of 2008. Back then, lenders extended mortgages to borrowers with poor credit histories and limited means to repay, ultimately leading to a wave of defaults that triggered the collapse of the housing market. Dent's warnings about the current housing speculation echo the eerie parallels to that fateful period, where irrational exuberance and unchecked risk-taking in the real estate market sowed the seeds of a financial meltdown. As history has taught us, such speculative bubbles are inherently unsustainable, and their bursting can have far-reaching consequences for the broader economy. A necessary reset. You see, according to Dent, years of easy money policies and excessive stimulus from central banks and governments have artificially pumped up stocks, real estate, and other investments far beyond what economic fundamentals can justify. It's created a massive speculative bubble dwarfing anything we've seen before in terms of magnitude and duration. Left unchecked, this warped valuation environment makes it nearly impossible for the millennial generation and future investors to build real, lasting wealth. So as painful as an 80 to 90% market plunge would be in the short term, Dent believes it's a prerequisite to clearing out the excesses and allowing a new, healthier economic expansion to take root on a solid foundation. One that can fuel sustainable growth and prosperity for younger cohorts rather than just benefiting the asset-rich baby boomers. It's a reset, not the end of the world. Now, does that mean Dent is definitely right? Of course not. His is just one contrarian voice going against the crowd. But it's a voice that has been vindicated before by accurately forecasting seismic market shifts like the dot-com crash years in advance. So while you shouldn't blindly accept his bubble call, it's worth taking seriously and pressure testing your own investment thesis against it. As always, do your own thorough research, keep an open mind, and ensure your portfolio is properly diversified to withstand turbulent times. Because if Dent is even half right, the implications could be earth-shattering for investors. There you have it, folks, Harry Dent's case for why we may be in the biggest financial bubble modern history has ever seen. While his predictions seem outrageous, Dent has called major bubbles before, like the 2000 dot-com crash. So we can't just dismiss his warnings out of hand. Whether you agree with Dent or not, one thing is clear: we are living in unprecedented economic times shaped by massive money printing and stimulus efforts. Keeping a level head and staying diversified will be key to navigating any potential market turbulence ahead. I'll continue monitoring this situation closely and provide more updates in future videos. Let me know your thoughts on Dent's bubble theory in the comments below. And if you haven't already, smash that like button and subscribe for more investing insights from your friend, Iggy. Thanks for watching and see you next time.